because for me, I've slowed down with like the content and everything for me because I'm just focused on trading. We're talking every day about trading. So, but once I get this in cruise control and I really have it dialed in, yeah,
Yeah,
able
bro.
to,
It's a lifestyle, man. Like being just a productive human being in general and just being a good entrepreneur, or even if you work a 9 to 5 and you're trying to be a sound investor or a day trader or whatever, it takes a lot. It takes a lot of discipline that otherwise doesn't really exist in like the normal life, you know?
facts.
You learn a lot about yourself too, bro.
Oh yeah, oh yeah. I've been tuned in with myself a lot since my trading journey started, especially getting into the live markets and feeling the market pull, on your emotions. Yeah, to be honest with you, I'm enjoying it because I've been on this journey of like evolving and becoming a better human being and looking into my flaws and figuring out new, pathways to go about things. And um yeah, that's what I keep saying, like trading was inevitable for my journey. So I'm just happy I'm here because I'm passionate about this. So
Yeah, bro. It relates to one of the biggest problems in the industry, and it's that you have a bunch of people that aren't millionaires trying to give millionaire advice. And you see it in the statistics. Why do most retail traders or investors not make money? It's because they're listening to a bunch of other retail investors or influencers that aren't actually making money from the markets. And so it's just a big cycle of people running around with a bunch of hope in their pocket, aiming for this outcome that doesn't require any hope.
yeah, facts. And I see it even more so today than I did my very first day coming into the game and gradually seeing it more and more. But like, man, it's clear as day to me now. There is 98% bullshit out there on YouTube. Just period. No offense, but it is what it is.
Yeah, the worst part is that none of the people that hype people up and give people these hits of dopamine will ever come out right and say, "Look, we were wrong." They'll just constantly keep pumping more and more and more and more. Again, feeding people this hope narrative, and more people hopefully will start to wake up to the real researchers and the real data and the real, insights in the game. It's hard out here for someone who's given value. Um, Nonetheless, the people that are in our community, bro, they're benefiting. Like the private call that we had this rising, and just having the ability with the community to just talk through trades, talk about the markets, and just communicate what we're actively doing in our portfolios or in our trades is really a benefit that not a lot of people on the internet are doing. Number one, because they don't know how to, and number two, um, because it doesn't give them the viewing pleasure, or their audience the viewing pleasure of the dopamine hit, so they don't do it. Um, but yeah, that's where we stand apart, bro.
Yeah. Nah, facts. I mean, I love our community. There's just a night and day difference when you go into, one of our Zoom calls during the week discussing where the market is at compared to going on X to see where the market is at. It's a 9-day difference, and we've been on point all year long. All 2025, we've been on point. And yeah, huge shout out to you, bro. You're the leader. So um,
Let's get it, man. Well, we got a good breakdown for you guys today. We're going to dive into some panel discussions, keeping it real with you guys, all institutional based insights, showing you guys that this space is far from over. The bull run, the adoption, the institutional interest, the yield generation, the momentum that's underlying crypto is still there, relatively speaking, risk off sentiment due to some underlying fundamentals. But once those are behind us, I've been a firm advocate of staying buckle up, because we are still front running the financial institutions right now. The vast majority of the volume and volatility that has existed in crypto has been driven by retail and retail leverage at that. So do you really think that, considering that we're on the verge of institutional adoption, Ask yourself this question. Were they really going to let a bunch of over-leveraged retail traders become overnight success stories before they got into the market? Absolutely not. So what are they doing? Most likely clearing out the over-leveraged positions that exist before they come in, before ETFs, before regulatory clarity, before all these things finally materialize, which is happening. Understand that it was never going to be some smooth ride to the upside because of some theory that these retail traders have pumped to you guys in regards to, certain coins price action in the coming weeks ahead. All right. It was never going to be that easy. And anybody that expected that, well, now here we are. And whose team have you been a part of? A realistic team that's been giving you guys accurate insights on how to save your portfolio overhead, how to manage capital properly, how to dollar cost average in properly at a discount to mitigate risk, to maximize reward? Or have you been part of communities that have just been constantly telling you guys false information that is never accurate, never right, never spot on, and has now misled you to wherever you're at in your career, right? Really got to ask yourself. 2025 hopefully was an awakening year for a lot of people that fell victim to the influencers that shield people things that have now not come into fruition. Hello, wake up, guys. Come on now. Heading into 2026, hopefully you don't repeat the same sad patterns. And you really tune into a community of like-minded people that are here to better themselves. I want to start off here with this post because this backs kind of what I'm saying. This is Sandy Call from Franklin Templeton, who has also valid and active credentials. We've talked about her before on this call, on this platform. From the World Economic Forum. She's an advisor at the DTCC. She's an advisor at the CFTC, or a board member at the CFTC. She actively works right now at Franklin Templeton. Listen to what she says, because this is only from just a couple of months ago, about how we are still front running the institutions. And then I want to play another video clip on how we are on the verge of regulatory clarity in the space for the first time ever in crypto history.
Kind of a cheat, because you should really be answering this question. But I will do my best to answer for you. I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point. And that the capabilities and the functionality that the institutional financial services markets are going to need to develop are all coming now from the retail side. The gamification, the social interaction, the inclusion of short form video as forms of instruction, the ability to take actions on one's own that equate to what institutional players can do today, the ability to transfer assets peer to peer. These are all activities that retail are used to, and they operate with day to day in their everyday life. It's our institutional industry and it's our institutional rails that have kept us from keeping up with that level of innovation.
We're going to agree.
So I wanted to start today's breakdown off with that because of this post that I share with you guys, where I said here, just to kind of keep you all on the right mindset during this market pullback, I want to remind you all, clear regulation is coming for the first time in crypto history. Clear rules for institutional investors to onboard into this space will exist before year end 2026, and likely a lot sooner. Now is not the time to be bearish on crypto. Now is the time to position for a future where retail is no longer front-running institutions. Like you heard Sandy Qual say, that's not my perspective. That's coming from somebody that has institutional background. And position yourself before the institutional floodgates have fully opened. That's the mindset that I firmly believe everybody should have right now. Look at this pullback as nothing except a beautiful opportunity. So playing this here for you guys, mentioning regulation is coming and that the crash was a blessing in disguise. Take a second and listen to this recent CNBC TV report from just the other day.
All right, welcome back to Worldwide Exchange. Turning to Washington now, where the wheels, they may be starting to move again on a bill to regulate and establish guardrails for the crypto market. Our Emily Wilkins joins us now with much more on this story. Emily, good morning.
Good morning, Frank. Well, yeah, there is some new hope that a major crypto bill could see its first votes in the Senate next month after bipartisan talks around the measure have restarted. Coinbase CEO Brian Armstrong was up on the Hill yesterday meeting with senators about the legislation. It's a top priority for the crypto industry, would define when crypto would be a commodity versus a security. And Armstrong told me that while some issues do remain, he is seeing progress.
Market structure legislation for crypto is made really good progress. I think we're 90% of the way there. The Senate Banking Committee is also working on their next draft, which we're told is going to get to a markup in December. So seems like good progress from the meetings that I've had today.
Movement on the bill stalled the other month over a leaked proposal from Democrats that would have expanded regulations of DeFi. Now, Armstrong said that many Democrats he has spoken with have now disavowed that draft, said there are discussions of finding maybe some sort of middle ground, potentially something that would allow DeFi participants to voluntarily verify a customer's identity.
In certain markets, people want to know who their counterparty is. Maybe they only want to trade with other accredited investors or institutions in the United States, for instance. And so I could imagine there being use cases that some market participants want to engage in that. But I actually think the decentralized, permissionless, open to the whole world is kind of more exciting and more higher potential impact. And so I want to make sure that that core piece gets preserved.
Discussions are still ongoing, but timing to pass the bill is now down to the wire because even if these Senate committees vote next month, the entire Senate and the House are going to need to vote as well before those midterm races get underway next year. Frank?
So I wanted to play that because it kind of puts the timeline a little bit more into a reality check for people. You know, she said that even if they vote on the bill or pass it next month, it still has to get sent somewhere else for them to vote on it again and push it through that. So it's like you can't expect we as retail traders with all the hopium and hype that's presented to us to expect a super huge, massive bullish recovery and freaking $1,000 price predictions if institutions, which institutional money is what's going to get us there, don't even have the legal clarity to come into this space yet. So that's why I wanted to play this for you guys, to give you all kind of like a reality check and set the tone for yourself heading into 2026 as to what to really expect. Once this stuff is passed and once the regulatory guidelines are clear and the road is paved for these institutions to really onboard, I firmly believe that they will allocate way more than what they're allocating now, but that has to happen. These institutions will not come into this game full force like people are trying to get you to believe until this is in place, right? So just trying to bring people back to reality with that one. Coming over here, that leads me to this post because this one was a really great wake-up call. It says, you do not want to miss out on the biggest opportunity of a lifetime. This is from Future of the Global Markets 2025 event that took place at Citadel Securities. And this is an interview. This is from October 7, 2025. So again, literally the day after, think about this. There's no coincidences in these markets, guys and gals, whether you believe in theories or moon cycles or fundamental data or whatever it is, nothing is a coincidence. It all happens for a specific reason at specific times. This gentleman was on stage saying that you do not want to miss out on the biggest opportunity of a lifetime the day after the total cryptocurrency market cap topped out on October 6th at $4.24 trillion. Right? Sitting in a room full of institutional investors with some of the biggest names in the game, listen to what he's saying.
Follow culture and follow money. There is no other today for the next 10 years, if you don't understand where the young are seeing the world going, where they're seeing their art going, where they're seeing their memes going, where they're seeing their trading going, where they're seeing their assets going, you're going to miss out on the biggest opportunity of a new generation of technology exploding. And I will say with one sentence, I said, everybody in the world should own Bitcoin, which I'm glad a lot of you do as a way to understand it and prove it. You should do the same with stablecoins, and you should do the same with NFTs and art and meme tokens, because there's no other way to understand where this is going.
Joe?
I saw your eyebrows go up, bro. Go ahead.
Yeah, he says there's no way to understand where this is going. So spread your eggs, across multiple baskets in a nutshell.
And then the craziest part is, bro, is I'm not going to read the comments, but if you go through and you read the comments here of just the average retail mindset underneath of this post, considering that the guy that's speaking here has probably more credentials than every single person that commented on this video, mind you. Because he said meme coins and because he said NFTs, people are like, oh, why the heck would you own those? Well, institutions are, that's why. Okay. And if you're not understanding that, guys and gals, again, you're not locked in with the right research. So let us show you that. Here, let's go back over to Franklin Templeton, Sandy Qual, sitting on stage with an ex-BlackRock representative of over 20 years of experience at BlackRock, openly mention and confirm that they not only invest in meme coins, but that they trade meme coins, right? This is a huge confirmation. And I'm not sitting there, supporting meme coins by any means necessary, because personally, I don't hold them in my portfolio. I hold one meme coin and that's it. I'm not going to disclose which one that is, but I don't hold a lot of meme coins. But nonetheless, if you do your research and if it has some potential and if you have the risk tolerance, could it be a good diversification option? Possibly. And it's not something that you should ignore or just shy away from. Instead, you should be open-minded to the technology. You should be aware to the transformation and not married to some bias on one specific project. Take a second and listen to Sandy Qual mention that they trade meme coins at Franklin Templeton.
8 different chains, and we're running node operations on 12 different chains. And so we operate also as very much a digital native. And we have really come to understand the value in the ecosystem, right? The speed of development, the interoperability, the ability to structure trades in all new ways that were impossible even just a year or two ago. So we believe very strongly that there is so much value to unlock in these protocols and in these new altcoins that are coming to market. And we believe that this is going to be, as people become more and more comfortable with it, with a good regulatory framework, this is going to be an opportunity on par with AI. So we really kind of see both sets of opportunities and are looking to really build across both areas.
Joseph, before we come to you, did you say altcoins? Does that mean meme coins?
Yes, well, we actually have published research and we have a whole theory that meme coins actually reflect a new style of investing from younger investors that want to trade fast-moving, viral trends, and that there's a whole set of crowd factors that we've identified that help drive value around those meme coins. So yeah, we trade meme coins as well.
Love it. Joseph?
I love that right there, because it completely crushes anybody that doesn't have credentials. That's like, oh, institutions don't touch meme coins. Yeah, they do, so don't knock them off.
And they're validators on 12 different chains.
On 12 different chains, generating yield. Second portion of that previous video that people did not like is that he mentioned holding some NFTs. Well, a lot of people don't understand that these institutions are going to be able to utilize NFTs and post them as collateral, lending, borrowing, liquidity providing. And NFTs go so much deeper than just pieces of art, digital art. They're going to go into like legal documents and, house deeds and so on and so forth. All right. So don't just knock the technology because you don't understand in a general package term what an NFT is or what use case or utility it can provide. Instead, shift the mindset and do research. Here, we always attempt to just give you guys institutional insights. This is a market maker, Key Rock, sitting on stage at a recent event that took place in 2025, talking about how NFTs are going to be utilized in the future as collateral.
They were just, traditional assets versus digital ones.
And borrowing against them being one of the key things?
I mean, it's one of them, definitely. And I think that when you think about how big could it be, I think it can be absolutely gigantic. If you look at the most extreme examples, and again, like what we do on NFTs is, it's kind of funny, right? But can you imagine that I'm currently issuing loans, taking pictures of cats as collateral? And it works. Why not? I personally would not put a tremendous value in a picture of a cat, but it's tradable, it has a market, it has liquidity. You can use that. And of course, that's the most extreme example. But if that's the extreme, imagine everything that you have in between stable coins and pictures of cats. There's loads of assets that you can use, as collateral, and loads of different types of value that people would put on it. So the size of it can be absolutely gigantic.
Yeah, and one of the...
And that's coming directly from a market maker in this space, So just to give you guys some food for thought, don't always just listen to the average closed-minded retail trader on the internet that's like, oh, I don't want to touch those things or have them in my portfolio. It's most likely due to lack of education if they don't. I'm not saying to go out there and hold them in your portfolio, but just again, broaden your horizon, diversify your portfolio, understand the entire spectrum of Web3 and these new digital technologies, and don't just be biased thinking that there's one chain or one coin that's going to rule them all, right? So, with that being said, coming over here, starting to get into, because he mentioned and talked about posting NFTs as collateral. Well, let me show you guys that these institutions, something that myself and Aqua have been screaming at the top of our lungs, is that double-digit yields is going to become the new normal. And these institutions are 110% aimed at not only providing that for their clients, but utilizing it themselves. Broadridge just dropped a massive study with over 300 financial institutions across North America and Europe interviewed. The takeaway: custodians, asset managers, and banks are now operationally integrating tokenized assets, not testing, integrating them. Institutions are chasing higher yields, more flexible structuring, and improved liquidity through tokenized secondary markets. And here's what most people don't see: that these same institutions are now starting to use DeFi protocols to generate additional yield for their clients, which is why me and Aqua stress so much to come tap in with us in the Wealth 28 Club and learn about DeFi, learn how to get your digital assets working for you. Because look at what they're doing. Look at this. This is directly from Broadridge. I'm not going to read the entire thing and bore you guys to death, but right here, it goes on to talk about how beyond enhancing transparency, liquidity, and access to new asset classes, tokenized assets allow firms to leverage DeFi protocols to generate additional yield opportunities for their clients. This is directly in a Broadridge document from this year. Talks about the regulatory snapshot and how once the regulatory landscape is firmly in place, that these institutions will onboard into this ecosystem. And then right here, it says institutions are motivated because access to higher yields, more flexible structuring, and the ability to improve liquidity through tokenized enabled secondary markets is now available, right? So in this document, they're talking about chasing higher yields. They're talking about earning on their digital assets and on their portfolios. So you as a retail investor, what does that mean for us? We should be attempting to do the same thing to keep pace with the institutions, which leads me over here. This is going to roll us into our Metallicus discussion today, because these are two very important comments that are coming directly from individuals that either work with or work for large institutions. The first one, this gentleman here, goes on to talk about how cash flow is king, compound interest, and how it's the strongest force in the universe. Take a second and listen.
Comes down to velocity, comes down to velocity and continuing to fundraise, sort of cadence of public awareness, and then being sort of north of minimum scale that, to Lauren's point, only a few will survive. The history of business would teach us that compound interest is the strongest force in the universe. And so whoever produces the best cash flow will eventually win. And I think the people getting smart about and deep about their risk-adjusted cash flow will be the DATs that emerge over the long term. Because there will be points where right now everybody's trading at a premium to MNAV, but there will be points where people trade at
not everyone, not today.
Sure,
today.
But there's a lot of premiums to MNAV out there, but there'll be a point where there will be a lot of discount to MNAV. And that's going to be a moment where cash flow matters, where, capital markets analysts are going to go back to, what is your multiple on discounted cash flow?
So the premium will represent their ability to generate cash flow.
Yes. And the ones who are thoughtful and open-minded about, about generating that cash flow will be the ones that will win. And that's been the case for the entire history of the space. Being closed-minded to new innovation has never been a good investment strategy in the history of crypto.
Being closed-minded to new innovation has never been a good investment strategy in the entire life cycle of crypto. And he's talking about how the people that learn how to generate cash flow are going to be the people that come out on top.
Yeah, he's talking about businesses as well, institutions as well.
Think about it. Really put yourself in a position mentally where you say to yourself, you know what? These dudes that have been telling us cash flow is king. Well, look now. October 6th was the local top in crypto. The market shed over $1 trillion in value. You most likely just like the vast majority of other people did not sell the top, right? So what would have been the best strategy between now and wherever you think this market's going to go in the future? The best strategy would be for you right now to be generating yield on your digital assets and just using the market's money to compound and restake or recompound, provide liquidity, or take the yield and put it into other positions to maximize the yield and grow your portfolio during this entire downturn.
Facts.
Yeah.
Facts.
But because of ego and because of misaligned influencers on the internet, people won't have that awakening because they're distracted. They're distracted and manipulated.
Yeah.
So it's sad to see, but it's the truth. And we're here in this community to put out the truth to you guys, not the stuff that everybody wants to hear, but the stuff that you need to hear. Second thing that was stated in this panel discussion is that these institutions will need to understand altcoins and new DeFi technologies if they want to survive. So here this gentleman goes on to talk about that. And what I stated is that what this means for retail is that we should learn how to generate yield on the most secure, fast, and scalable chains in the game. And we should have a long zoomed out perspective. If that's what the institutions are doing, we should align with that and we should do something similar, right? Because I follow money. And if that's what the smart money's doing, why would you not want to be a part in that, right? Take a second and listen.
And the way I look at it, like a Polkadot, it's an infrastructure play, right? I think, when Gavin built this solution, he built it because it solves what Ethereum could not. And this is scale, this is throughput, and this is governance and security. So I think about, as you look at these asset classes that you want to get exposure to, you think about what it can offer and how you think about positioning that exposure. We're talking to RIA firms and everything, and you can look, Rick Edelman would always say, hey, you should allocate 3% of your portfolio to cryptocurrency. And now that is moving up to 30%. Now, predominantly, I'd expect most of that to be in a Bitcoin exposure position. But as we educate institutions and end users on, like I said, these asset classes, we can start to see that trickle down effect into altcoins, which are these more technologies that people get a better understanding. And as everything moves on chain, people will need to understand how these all play a role in the ecosystem.
Yeah, I know that the volume is low. Do apologize. Not my fault though. It's due to where they put their microphone on their lapel. Nonetheless, this gentleman said that institutions are going to need, in order to remain adaptive, they're going to need to learn about these new technologies, DeFi technologies, altcoins, and that once the regulatory guidelines are clear, they're going to go from a 3% allocation to a 30% allocation. Again, I'm trying to show you guys that right now we are still in this window where we're before the institutions, y'all. All this price action. Go ahead, Aquila, because you unmuted.
Is 3 to 30? Is that a 10x?
Yeah. We're before. We're literally, as a retail investor, you have to understand. We've positioned ourselves before all of this. And so that comes with a certain level of maturity and discipline and just sound understanding that you have to have, not only about the markets, but about yourself. Because in between now and whenever institutions actually flood in, you're going to be manipulated by a bunch of little tiny in-betweeners, in between market cycles, in between price predictions, in between this, in between that. And the real question is how are you going to survive that? The best strategy, in my personal opinion, without leverage, is to stake an asset, secure the network, be a node provider, generate yield in a wallet or a cold storage device that is safe and secure, and hodl down for the long term while you're generating passive income.
Facts. There's a big difference between that portfolio that does that and the other one that doesn't do that. Big difference after the course of 3 to 5 years. So DeFi is the way to continue to maximize your portfolio every single day. And this is what they're here for. These digital assets weren't created to just chill in some cold storage wallet. No, they were meant to get put to work. The technology get put to work. So, and we've been screaming DeFi for going on almost 2 years now. And all we're seeing is just more and more DeFi news like this, and DeFi is just continuing to get bigger and bigger and bigger. And then eventually it's just going to be right in front of your face everywhere you look, especially with what Metallicus has going on, you know? Sounds like coming very soon, we're going to be able to have our digital asset, you know, at our local credit union. But yeah, time will tell.
DeFi is going to be that niche category in crypto that right now nobody understands because of there's so many excuses that people throw at why they don't understand DeFi. So I won't get into that, but it will be the niche category that is one of the biggest, if not the biggest in the future, and one that everybody uses. One that everybody uses, even in probably your average traditional mobile banking app is going to be sat on DeFi rails where you're going to be earning yield on your savings account. That's going to go from 0.05% or whatever it's at now to 4% or 6%, or in even some cases, maybe 9 to double digit percentages of 12 to 15. And it's all going to be sat on DeFi rails. So just again, behoove you guys to learn it and take advantage of it now with whatever risk adjusted approach you're willing to approach it with. Because again, you do need to be mindful that there are risks involved, but there's ways to mitigate those risks. It's just going to benefit you long term. Yeah. Shout out to Marshall for this post, because I couldn't agree more. As time goes by, he said, I realized the only chance the younger generation has to buy a home is through DeFi. With inflation rising, wages stagnant, cost of goods increasing, we need a miracle. The miracle of compounding interest. We are building freedom technology with loan protocol. Bro, that makes so much more sense. Imagine, go ahead.
That's just so crazy that we've been aligned with this. It's wild how long we've been aligned with this, and to now, read a post from a few weeks ago from Marshall saying the exact thing that we've said in different ways. Man, huge pat on the back. I mean, for real. Like, DeFi is the truth. And like I said, too, a while back, I think the way they pay off United States' debt is through DeFi. So
it's so crazy to really think about what he said. Imagine two people. They both have XRP. One person, when XRP goes to $100, let's just use that as an example. One person, when XRP goes to $100, sells all their XRP for fiat, and then goes and puts a down payment on a house of, I don't know, let's just say $100,000. They have fiat, they have $100,000, they give it to the bank to get a loan, to put a down payment on the loan to get their house. And they go through the traditional financial system to do that. Versus the second person that has the XRP, when it goes to $100, they take it over to loan protocol, they lend it out, they borrow stablecoins against it, right? And then they go about the house purchasing process. Instead of going through the bank, they take all of their capital, lend it out, borrow against it, buy the house cash. Now you have outright equity in the property and you own it. You can tokenize it, right? Then use the yield that you're earning from your tokenized property to pay back your loan to get your original lent out XRP back. And you never had to sell your XRP. Who's it's going to be the person who doesn't sell their XRP for trash fiat.
Facts. And that's what being a bank is all about. Being a bank is not all about cold storaging your digital asset in a digital wallet. Like, no, a bank can do a slew of things, right? CD accounts, credit cards, auto loans, home loans, personal loans. Being your own bank is being able to do all of those things, right? And that's what DeFi gives us, that ability to have our own credit card, to create our own loan. Doesn't matter. If you have the liquidity, you can get the loan. So
I think that the best part about, just in general, and I'm not here to shill Metallicus to anybody, use it or don't, could care less. I personally do, because it provides opportunity, and I like opportunities to grow my wealth. I'm willing to take the risk that is involved, understand that. But sitting here and saying that lending and borrowing and liquidity providing and DeFi primitives are going to be the future is one thing. But then another thing is saying that these things are going to be the future on regulatory compliant infrastructure. And that is where I firmly believe that Metallicus has the upper hand in the DeFi ecosystem, is they're doing it properly right off the bat with regulatory compliance built in. So coming over here, I'm sure Aqua has a couple of good highlights to throw at you guys. But if you have not read the Metallicus Q3 report that is now live that they put out just a few days ago on November 17th, highly suggest you guys take some time, if you're Metallicus skeptics, to just go and read thoroughly through this and do some of the research they've kind of laid out for you all on what they've accomplished looking back over the past consecutive couple of months, because these announcements are huge, right? These announcements and these things, these ongoing developments that are set to scale in the coming months ahead are all part of the whole entire dialogue that I've shown you guys so far, is that we are front running the institutions. Considering what Metallicus is doing for credit unions, you don't want to be a market participant after all the credit unions flood in, you know?
Facts. That's super facts.
But go ahead, Aqua, if you want to share your screen and go over some of these things. I do have some.
Yeah.
When you start to talk about the stablecoin portion, I have 2 video clips to talk through on how every financial institution is on the path towards generating their own stablecoin, and Metallicus provides that technology.
Okay, hold on 1 second here, though, because as a matter of fact, the one part I just want to go over, are you able to? So for me, when I opened up the Q3 report, it was a download. Are you able to pull it up and just share it and just go to page 6?
Yeah, it's
real
right
quick. All right, hold on. Let's see here. So yeah, go to page 6 real quick. And I just wanted to highlight that SOC2 compliance in progress. So it says there, we continue to work toward SOC2 compliance with internal control development and audits progressing on schedule. Certification is targeted for completion the first half of 2026. Now, when I first read this bad boy, I had no idea what SOC2 compliance was, like many of us, right? So I had a full-on conversation with Grok, educating myself on it. And let me share my screen and share what I learned. So I said, what is the easiest way to explain the SOC2 compliance? And it says here, SOC2 compliance is basically the gold star security report card that big customers demand from tech companies and independent auditor. Hold on, let me take that back. An independent auditor spends months testing whether your system really protects customer data, stay online, and keep everything confidential, right? So basically, SOC2 compliance is the background check for enterprise software. Then I asked, okay, is this a big deal? And it says, yes, Metallicus progress towards the SOC2 compliance is a major milestone for the shareholders, especially in a hyper-regulated world of blockchain fintech. And then let me scroll down here and start when I started asking about the BSA compliance and the SOC2 and how they compare. And it basically says that they overlap. So it says here, it aligns and it overlaps with the SOC2 compliance. And basically having BSA compliance, which we know BSA compliance is already in effect on the Metal blockchain, having that is basically giving them 40 to 50% of an overlap of already achieving what needs to be achieved, right? So basically they're halfway there. And it says here, so BSA compliance is basically we're legally required to stop criminals. That's what the BSA compliance is there to do. SOC2 compliance is here to make sure that they can prove to banks and enterprises that the entire system is secure and reliable. So for a compliant blockchain bank like Metallicus, the two go hand in hand. One is the law and the other is an enterprise handshake that turns pilots into million-dollar contracts. So I feel like this is the cherry on top to basically, have these institutional relationships go into full effect. Because yesterday as well, I started educating myself on SOC2 compliance during the Wealth 28 Zoom call. And this is a list of institutions and companies that are already SOC2 compliant. So at the top, you got Amazon Web Services, Microsoft, Google Cloud, IBM. I'm just going to name some of the names that I'm familiar with. Slack, Zoom, Dropbox, right? Adobe, DocuSign, all of these guys are already SOC2 compliant. So for Metallicus to be in progress and this, completion to be completed the first half of 2026, this is another major step. And we can add this to the resume of why these guys are aligned the best with regulation, So, yeah.
I'll throw in there too, because a lot of people that, lack education and the ones that are like, oh, Metallicus is a scam and blah, 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 there's physical proof out there on the internet. Let me share my screen. I shared this with you guys, right? This is let me go over this. The BSA compliance, and the people that are like, oh, you don't need to be BSA compliant. No, you do. And they openly have forums on this for institutions and for retail traders to go and learn that think that this is not an important thing. So this is a recent event that took place from October, just last month. Only has 36 views, and it's from the MDDC Credit Union Association. And this is the compliance officer, Andre Lucas, going over a complete breakdown on how these credit unions, if they are not up to date with their BSA compliance, they fall out of compliance, right? So this is all recent. So for anybody to say that BSA compliance is not important, he's literally telling people, hello, if one employee is not updated on their BSA compliance training, then the whole entire organization falls out of line of BSA compliance. That seems to me that BSA compliance is pretty darn important, right? Take a second and listen to this.
Into a credit union. I have done a BSA. I have gone into a credit union. I have done a BSA audit, and they were in compliance with the 12 to 18 months because there had been maybe 16 to 17 months since their last test. But their policy said annually. So they're not in compliance. If your policy says annually, you do it annually. Okay, so undocumented training or failure to train. And this is for everyone. If you got 60 employees and you got one employee that has not been trained, you're out of compliance. Make sure, and board members, please make sure that you get your BSA training. Incomplete CTRs and SAW process.
Right? So if one employee is not trained on BSA compliance, the whole entire organization falls out of line of being BSA compliant. So at their organization, from a freaking top-down level, they're probably super strict on being like, hey, you guys have this training to complete, and it's probably like a PowerPoint where they have to ask questions and they have to test a certain amount and pass like probably with a 70% to check that they're BSA compliant, that they understand the regulations. And if they don't pass their little tiny test, then they fail, and that organization falls out of line of BSA compliant. That, again, like I'm saying, that's anybody that tells you that BSA compliance is not important, but that's what they're doing on the infrastructure level at institutions. Come on now, y'all. And who's BSA compliant in this space?
Metallicus.
And
bro, you're spot on with how they remain compliant with having their people take a test and score a certain amount to prove that they retain that information. Because I just take myself back when it was like 2013. I worked at a bank as a personal banker for a short amount of time before I had all these visible tattoos everywhere. And I just remember multiple trainings like all the time and having to score a certain amount to basically, pass and prove that I retained the information. And a lot of it was BSA compliance stuff. I just had no idea what it was, as much as I do now today, but at the time it was just like, let me get this test out of the way type of thing. But yeah.
110%. Now, considering all the, froth that's on the internet around Metallicus and XPR, especially the uneducated retail investors that think that XPR is some competitor to XRP, when in reality, if you just go look at the ISO standards, it's just the way that they set up their ticker symbol, where the X just represents that it's a cross-border asset and that there's no one jurisdiction that has control over it, followed by RP, XRP, Ripple, XRP, and XPR, Proton. There's no competitiveness. Actually, as a matter of fact, the XRP network, or excuse me, the XPR network is actually set to enhance capabilities for XRP holders. There's no competitiveness at all, right? So I want to read some of the things in this report. And as I'm reading this, then I'm going to go and I'm going to play some video clips from large players in the game that have recently spoken on stage. This video, by the way, is, mind you, from 6 days ago. This one over here is only from 2 weeks ago that I'm going to play. And listen to what these people say is happening behind the scenes while I read what Metallicus is doing, and tell me that this doesn't align exactly with what Metallicus is doing right now, which is just mind-blowing that people are ignoring this right now. Okay. So listen to this. This is, again, the Metallicus Q3 report that dropped like a few days ago. First, at the top, Metallicus announced the CLD USD, the first member-facing stablecoin issued by a U.S. credit union. 15 plus institutional stablecoins deployed in this test environment. By the end of Q3, more than 15 institutional branded stablecoins had been deployed in the XPR network test environment as a part of the Metallicus stablecoin pilot program. So you mean to tell me that there's really people out there on the internet, XRP influencers, that are saying that XPR network is a scam and that it's a meme coin, but here 15 different institutions have decided to launch branded stablecoins on the network in a test environment on the XPR network? How much sense does that make? Really ask yourself that question. Metallicus worked closely with participating credit unions to explore wallets, minting, burning, and sending of funds using test tokens without engaging in real assets. So what I like about this is they literally tell you why there's been no reflection in price action, because this has been all in a test environment without engaging in real assets, right? So of course there's going to be any price action. I love that they are open with that and tell you that, like, hey, we're testing this, guys. This is a test. This isn't the real thing yet, but nonetheless, a very important test. It says this compliance aligned zero risk sandbox enabled institutions to evaluate operational readiness, idea, and develop internal expertise ahead of potential production deployment on Metal blockchain. Are you seeing that right now? So what happens when they turn the lights on and it goes from test environment to the real environment? Come on now, y'all. And hold on, again, mind you, I'm going to play 2 video clips that are going to set the tone for what I'm reading for you guys, because this is going to happen. This is 100% going to happen. I can say that with confidence. Metallicus also formed a strategic alliance with InvestFi to deliver stablecoin capabilities through its digital investment platform. The integration enables credit unions and banks to convert stablecoins to USD and vice versa in real time within online and mobile banking. Metallicus provides the blockchain infrastructure, while InvestFi distributes the solution across the network of financial institutions. Cornerstone League, representing over 600 different credit unions, partnered with Metallicus to offer its member access to the stablecoin pilot program. Again, another mention. That is now the third mention of stablecoins. As a part of the Metal Blockchain Innovation Program, participating institutions can evaluate stablecoin issuance in a risk-free, compliance-aligned sandbox. Remember, me and Aqua mentioned that compliance is going to play a very important role, and Metallicus is at the forefront of that. Supporting education, operational testing, and readiness for future deployment. Y'all, we are, again, adopting these digital assets before the deployment. You all freaking see. Do not get manipulated by the influencers that are like, oh, this is fake.
Yeah. Don't let them lie to you. Don't fall for that gibberish.
Okay. Last but not least, it says the Banking Innovation Program now includes over 40 participating institutions, including credit unions, credit union service organizations, and credit union leagues. These organizations are actively exploring stablecoins, digital identity custody, and compliance-first DeFi. This is very important. Compliance-first DeFi within a framework that connects to core banking systems and aligns with regulatory expectations. Now, I'm going to highlight this in purple because of all the people that are out there like, oh, XPR is a scam. Remind you, again, this is compliant-first DeFi to integrate with core banking systems, which we've already seen up here. What are these institutions? 15 of them have deployed stablecoins in a test environment on the XPR network right here. And if we scroll down, what it says, check this out. All right. First off, for all the XRP maxis, check this out. Internal testing is underway to add native wallet signing support. Again, support for the XRP ledger. Does that sound like they're competing with XRP?
No, not at all. And it's the native version too, so it's going to be the like XRP, you know.
Then down here, check this out. It says coin tracking integration is now live. XPR network is now integrated with coin tracking, allowing users to generate transaction history reports and tax documents directly from wallet addresses. This update adds an essential compliance layer for users operating across the expanding set of DeFi tools built on the network. So right up top, it literally says that they're doing this to align with compliance for scalable DeFi, where these banks can integrate this into core systems. And it's literally telling you guys the updates that XPR network is integrating in order to make this possible. Like, you can't make this up. You know? Now, considering that it mentions stablecoins, and how Metallicus is at the forefront, not only of the sandbox, giving a test environment for all these institutions to do this in a regulatory compliant way, but now check this out. Listen to these other institutions and systemically important people. I'm pretty sure this is the creator of Ethereum, if I'm not mistaken. This is Joe Lubin, right?
I can't speak on that. I'm not too sure if that is or
I'm
not.
pretty sure it is. Hold on, let me just see. Or maybe it's not. Hold on. Who is it? Joe Lubin, co-founder of Ethereum and CEO of Consensus. Okay. So he probably knows what the heck he's talking about. Well, listen to him tell you guys that stablecoins are going to be one of the biggest and most important use cases. And I just showed you guys in the Q3 document how Metallicus is building out that infrastructure for these institutions. Take a second and listen.
See how that all plays out. At a lower layer, we'll probably have networks of major financial institutions interacting with central banks and moving money like tokens around on those networks. We have this notion of a tokenized deposit, and tokenized deposits are likely to be a bunch more regulated than stable coins, and are probably going to be more restricted to certain kinds of use cases, and probably won't move freely on all sorts of blockchain networks. I think of stable coins at the lowest layer as more like cash than the other elements, and I think they'll be lightly regulated. I think they will admit lots of competition and lots of innovation. I think stable coins are potentially going to change the nature of commerce in the sense that there will probably be a bunch of stablecoin platforms. Maybe it's 5, maybe it's 50 around the world, but there'll probably be millions of stablecoins because stablecoins will be white labeled. Your community will want its stablecoin. Your company will have stablecoins. Regions will have stablecoins. And if you're a company and you want to incentivize your customers, anybody who has paid with a stable coin or is currently holding your stable coin, you can get messages to them. You can offer discounts and perks, etc. And so there will be other tokens that have money-like characteristics, but let me leave it there for now.
Thanks, Joe.
I want to know if he knows who Metallicus is, because wow, white label stablecoins. That's what Metal Blockchain is doing now. You just read about it.
Exactly, bro. Why I freaking like you can't make it up, bro.
Yeah,
it's literally the use case that Metallicus is providing in real time right now in a regulated environment with 100% guaranteed with institutions that are doing it right now.
Yo, should I share that metal dollar?
Let me play this last video clip because this just goes hand in hand, because I like to always show like at least 2 examples, because this guy pretty much says the same thing, but instead he says all these institutions have come to us and asked about building their own stablecoin. Listen to what he says.
Assessment around 2 years ago, we were reached out, like all the banks in the world reached out to us saying we're doing a stablecoin. Some sovereign entity came and do the same. So
So it's real quick, but he says all the banks in the world reached out to us because they want to issue their own stablecoin. You know, this is just huge confirmation of the use case that Metallicus provides already right now.
Doesn't Marshall have a post saying Metal blockchain will bring the first 1 trillion in stablecoins to the market, if I'm not
There-
mistaken?
There's something like that he posted, but the more posts that I'm interested in that he posted, I couldn't find it. If you know what I'm talking about, then let me know. But he said your blockchain does this, and he said my blockchain. He was talking about CBDCs.
Okay.
Do you know what I'm talking about?
Nah, I can't say I do.
This was recent. I tried to go on his page and look. I couldn't find it. So I'm thinking that maybe it was a reply to somebody. He was replying to somebody that I saw.
Yeah.
But nonetheless, great information across the board. Yes, please share that article about XMD. And then, we'll start to wrap it up and wind down there because we're going on an hour. And I'll share this one last post to kind of put things into perspective for you guys on the Metallicus front before we jump off for the weekend. But go ahead, bro.
Yeah, it just says today's environment. This is a XMD article that was just posted yesterday, right? So it says today's environment already contains a wide range of stablecoins issued by fintechs, blockchain platforms, and global financial institutions, with dozens of U.S. credit unions now testing stablecoin issuance on the Metal Dollar testnet and many expected to launch in 2026. A landscape is expanding rapidly. This is where it gets juicy, and it aligns with what you just shared. It says, in the near future, there may be hundreds or even thousands of legitimate reserve-backed stablecoins operating across multiple networks and jurisdictions. While each individual token may be transparent and compliant, the ecosystem as a whole becomes increasingly fractured. So this is all aligned with like the entire sentiment of today's video or today's podcast.
I love it, man. Research is undeniable when it's not research that's like inflated by hopium and hype, and instead it's just fixated on the research itself. I'll go outright and say that I wouldn't want to be on the opposing side of Metallicus and XPR Network because you listen to some influencer that was like, oh, it's a competitor to XRP, when that is the farthest thing from the truth and immediately shows a lack of education of just currency codes. Like, just go look up what a currency code is. And it'll just completely steer you away from anybody that thinks that the ticker symbol XPR and XRP have anything to do with them trying to copy each other. Like, it's the farthest thing. Just go look up ISO currency codes, go to the ISO website and just read about it, and you'll understand why they're tickered that way.
Yeah, that's facts.
So that's really all that I had for you guys today. I really like that last little share. This one is just, I'll wrap it up here, just kind of put things into perspective. This is something that I shared a couple of days ago that I feel like went, kind of under the radar, but nonetheless just shows that people that matter in this space, large entities, specifically in the US, know about Metallicus. So here in this post, I said, where did we go?
When you get to it, click on it so you can blow it up.
Yeah, can you see it now?
No, is this America's Credit Unions?
Yeah.
Oh, okay, yeah, we can see it.
All right, so I said here in this post, this is major. America's Credit Union just submitted, and mind you, this is back from when I posted this, November 11th, so less than a month ago. It's still relatively new. It's not breaking, like it didn't come out November 21st, but it's still from this month. This is major. America's Credit Unions just submitted an official letter to the U.S. Department of the U.S. Treasury in response to its request for comment on innovative methods to detect illicit activity involving digital assets, and the findings are huge for the DeFi space. The letter doesn't just push for innovation, it pushes for inclusion, ensuring that community-based institutions like credit unions can actively participate in the evolving digital asset ecosystem. Here's where it gets interesting. The letter specifically highlighted St. Cloud Financial Credit Union as the first U.S. credit union launching its own U.S. dollar-backed stablecoin named Cloud Dollar. Over 750 credit unions have joined the Sandbox program to experiment with stablecoin transactions and internal settlements. And guess what platform is powering these pilots? Mind you, again, this is a direct letter from October 17, 2025 to the United States Treasury Department. Okay. So this is them getting a letter from America's credit unions, and who's running the pilot that they talked about in the report directly to the freaking US Treasury? Metallicus. So do you really think that America's credit union as a whole, who represents like millions of customers, would have the audacity to write a letter to the US Treasury Department talking about the innovative things that are happening right now in the credit union ecosystem involving directly Metallicus if they were skeptical about the technology? I think not.
Absolutely not. Absolutely not.
So I said here's why this really matters and what it means. When you break it down, at least again from my perspective, America's credit union, who represents over 144 million members nationwide, directly addressed the US Treasury referencing projects powered by Metallicus, the same organization behind Metal Blockchain and XPR Network. The letter is now a part of official US Treasury records, meaning regulators, policymakers, and Financial Oversight Committee are formally aware of Metallicus' role in the ongoing digital asset sandbox experiment. There aren't these are not small pilot programs. Over 750 credit unions were involved, and the Treasury is being asked to support frameworks that make this activity permanent and compliant. So the US Treasury now knows Metallicus exists, if they didn't already, but more importantly, they know Metallicus is inside operating the framework for regulatory alignment. This clearly is not a project fighting the system, it's working within it. It's proving that blockchain can be compliant, transparent, and beneficial to the existing financial system. So in my eyes, Metallicus is quietly building what the rest of the world will one day depend on, which is regulated blockchain rails for real institutions. All right. And here's the proof right here. Okay. So just again, put that into perspective when you guys are out there on the internet and you're listening to opinionated people that can't open up a document and just put two and two together. To each his own. Always go out there and do your own personal research. That's all that I have for you guys today. Hopefully you guys enjoyed. Yeah, Aqua, if you have anything else, man, for the people.
Yeah, another great one. Super fire. Much love to everybody who tapped in with us today, for sure.
There's a couple of people in the chat that were asking about how to tap in with us in the private CyberX community. You guys can always head over to cyberxtrading.com. You can see the banner up there. Visit the website, look at the services that we offer, tap in with us. There's so many different educational things that we offer in this community to just enlighten you and put you ahead of the average retail crowd, whether it's you're looking for research, whether it's you're a trader and you're looking for access to real institutional insights and information and data that'll put you ahead of the average, trader in this game, whether it's DeFi and you want to learn how to get your digital assets working for you. All of those things all readily available in our private community. Many blessings to you guys. Be cognizant. Enjoy your weekend. Be safe. We got the holidays coming up. I'm sure that next weekend, everybody's going to be busy with Thanksgiving in the United States. If you're going to be traveling, make sure that you are being well aware of your surroundings. So people get a little bit chaotic and frantic in times like this. But nonetheless, many blessings. And I will see you guys in the next video. Peace.